market crashes, an unstable economy, and currency volatility are reasons why people are still reluctant to invest, even after a decade of cryptocurrency being introduced globally. But that doesn't rule out the possibility of crypto not being viable in the future and the perks it could offer in future business ventures. So, stay glued to your seats as we dive into the possibilities of how cryptocurrency can cater to new businesses. First up, the digital world of cryptocurrency. Evidently, the world's moving toward a digital ecosystem. With unique advantages for customers and businesses, cryptocurrencies are a promising addition to that ecosystem. Even those who aren't technologically skilled have at least heard of phrases like blockchain or Bitcoin. Even though many people may not be familiar with the technical aspects of blockchain, names like Bitcoin, Ethereum, and Litecoin are already well known. Although most people invest in cryptocurrencies the same way they would in other assets like company shares in the stock market, cryptocurrency can be used to purchase common goods and services. However, it's a new and fascinating asset class. Investing in it can be risky because it takes some study to understand how the system operates properly. But there are still pretty solid reasons to start a crypto-related business. Next, it's highly secure. Blockchain, a distributed, decentralized digital ledger, serves as the foundation for cryptocurrencies like Bitcoin. The transactions made are irreversible. They can't be changed or eliminated. Therefore, the risk of deception is much minimized. The fundamental concept of blockchain and cryptocurrencies will give the customers some peace of mind while receiving and making payments, even if there aren't any add-on features. In our opinion, accepting cryptocurrency payments adds another stone to the foundation of trust. And now, it ensures privacy. One of the defining features of cryptocurrency payments is anonymity. As a result, when customers are allowed to pay through a well-known cryptocurrency for goods and services, they're also provided with the option of maintaining their anonymity. When this happens, it shows that the business has a great deal of respect for its clients' privacy. Customers might still be required to complete KYC and provide their data. However, payment processors typically need less information than traditional banks would. Of course, there's no transaction fees. Cryptocurrency payments may offer some of the lowest transaction fees, depending on the payment gateway and compatible cryptocurrency we choose. Customers may be paying an incredible amount of money to their traditional banks and payment gateways if the company sells high value and high volume goods. Accepting Bitcoin and other cryptocurrencies could therefore result in a profit increase by reducing transaction costs. Next up, a decentralized platform. Blockchain is distinctive because of its decentralized organization. The transaction recorded on the public ledger isn't owned by a single party. The necessary details of the transaction are accessible by both the sender and the recipient of the payment, allowing them to confirm the timing and method of the cryptocurrency transfer. Crypto payments provide us with more control over our money than any other payment method in the world. Commissions and technical maintenance costs are not a concern. All transactions will be directed to that wallet after it's been created and the payment system is set up. And now, it anticipates business growth. The Bitcoin ecosystem is still experiencing enormous growth, so it's inevitable that people will start using cryptocurrencies as legitimate payment methods. Numerous companies all over the world accept Bitcoin as a form of payment. In the past, Liquid created a helpful tutorial on how to use Bitcoin for regular purchases. Many of the biggest cryptocurrencies are already accepted as payment methods by payment service providers like PayPal, making it easier for millions of merchants to run a business. So, how is cryptocurrency taxable? Well, if we're starting a cryptocurrency-based business, it's going to be taxed inevitably. The 2014 IRS decision established Bitcoin should be handled as a capital asset, similar to stocks or bonds, rather than a currency. People who own cryptocurrency will be subject to more difficult taxes as a result of this ruling, which has important consequences. Every time a capital asset is sold for a profit, tax is due. When Bitcoin is used to pay for products or services, the amount of cryptocurrency we spend exceeds the price paid. As a result, capital gains taxes are due. Let's say we bought $20 worth of Bitcoin and held it as it rose in value to $200. If we used the Bitcoin to buy $200 worth of groceries, we'd owe capital gains on the $180 in profit. We have to realize, even though it seems as if we spent the Bitcoin rather than sold it, for the IRS, it's the same thing. The fact that the IRS decided to tax crypto as a capital asset may have been because of the way most people treat it, says Jeff Hoops, an associate professor at the University of North Carolina and research director of the UNC Tax Center. I assume the IRS decided this because most people hold crypto as an investment, and we tax the appreciation on capital assets held as an investment, he says. Next, in other news, solving troubles with tax. Even within regulatory bodies in the same nation, there's no universal agreement on the legal standing of crypto assets. For instance, the Internal Revenue Service, IRS, views Bitcoin as property, whereas the Commodity Futures Trading Commission, CFTC, views it as a commodity. As great as this is, it poses a challenge for companies using cryptocurrency in terms of financial reporting. All sizes of financial services companies should also anticipate that their staff is participating in digital asset trading. Therefore, businesses should plan ahead and assume that they'll soon need to demonstrate to regulators that their company and its employees are held to the same standards regarding conduct risk and conflicts of interest when trading in crypto assets, as they'd be when doing so with traditional securities. Now for Alberta's cryptocurrency disappointment. The crypto market hasn't been doing so great lately, but back when it got started, it was really thriving. However, to secure a share of a flashy new industry and all the jobs and money that come with it, Alberta may stake its claim as the leader of Canadian cryptoland. A bill that temporarily excludes cryptocurrencies and other financial technology businesses from some financial laws while they test the currency in Alberta. It was passed over the course of the spring, as the price of Bitcoin remained largely steady. Months later, the price of Bitcoin was just more than $20,000 US. At least locally, things haven't always gone downhill. After acquiring Calgary-based Bitvo Inc., the enormous Bahamian cryptocurrency exchange known as FTX Exchange announced on Friday that it would open its first Canadian branch in Alberta. Jason Kenney, the Premier of Alberta, continued to be hyped up about this. Following his tweet, the FTX announcement suggested Alberta is open for business. Well, at least for the time being. But it's not just investors that are losing amid the sell-off. Newly created jobs are now being lost. All aboard a whole new roller coaster ride. Next, we have choosing a suitable crypto trading platform. Realizing the risk associated with trading cryptocurrencies is crucial before selecting a platform. We should be aware of the dangers involved with trading cryptocurrencies if we want to get the most out of your trading experience. Also, try and get familiar with the platform's features and how to use them. Since the market sites on the majority of cryptocurrency exchanges look very similar, we can easily ignore any information that doesn't relate to the investment approach. After all, you're looking for an exchange that allows you to exchange one type of cryptocurrency for another. Most sites for trading cryptocurrencies charge a fee for their services. These costs differ significantly between platforms. Their buy and sell prices as well as exchange rates change as well. The best option may not always be a low-fee cryptocurrency trading platform. Even well, a cheap service might not be the ideal option if you want immediate access to cryptocurrencies. It's still worth looking into to see what features are most important to you. An important aspect to consider is the cost of using a Bitcoin trading platform. Many are cost-free, but some have high fees to help in trade. Before selecting a platform, we should pay particular attention to these fees. We have to make sure the exchange offers low-risk trading if it's a beginner. Opportunities may be improved in this way. Also, we can trade in multiple currencies without being bothered about a high-risk increase. And lastly, we have crypto gambling. Finally, some good news for the people in Las Vegas. Online casinos are now accepting Bitcoin as a result of the recent growth of the digital currency. These online casinos offer a wide variety of features and payout options. A blockchain Isle of Man has been started and launched on the Isle of Man. The Delta Summit was held in 2014. The same year, the island's gaming authority started researching blockchain. To promote the new technology, the government is willing. Crypto-based gambling has a very bright future as the business sector is changing rapidly. Despite regulations, cryptocurrencies have established themselves in the gambling sector. The digital currency will be accepted on numerous web platforms this year. The biggest online casinos will still accept conventional forms of payment, but many players will start using cryptocurrency instead, as the increased security of cryptocurrencies will lower the possibility of hacking and identity theft. That's a wrap for this video. What are your thoughts about crypto-related businesses? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.